What's going on, everybody? This video is from Wednesday's Twitter Space. I do these every Wednesday from 8:30 on. If you're around, come check them out. We're gonna let it rip tonight. All right. Give it a few seconds. I'm gonna load up some charts. Still have yet to figure out how I can share my screen while doing this. I think there's a way. I'm not totally sure, but I'll get it figured out at some point, and then I'll just do that instead. But in the meantime, when we go through, specific tickers or something like that, I will tweet it, and then I'll share it to the top part of this space. But today was pretty smooth for me. I only had to take 2 trades, and I was all set. One at 10, one at 2. My 2 favorite times to really look for setups to play out, and it's been that way for really months now at this point. But all right, give it a few minutes. Let's see. Yeah, Tesla's looking good. I'm gonna post this one up first. So Tesla's going into the top bar right now. Here, ready? Okay, I'm gonna share that. Then we'll go. I guess we can go over the 2 that I took today. That's fine. But we'll look at those in a second. All right. So let's just let's start out first before we get into the old, how every space really goes, where it's more of a what's the word for it? I guess it's like a lecture from other people. I try not to do that, but at certain points I think it's necessary, and I got to be real. I'm at a point where I'm just gonna let it rip and say what I got to say and leave it at that. So, but we'll get to that later. First and foremost, most importantly, the actual chart. So, just to start off, kick off this live session. This is the first session that we've had since last Wednesday on Spaces, and really since last Wednesday, really have not gone down much, right? So, for the 3rd week in a row, I guess I can give that little bit of a recap as to why I felt at all in the, I guess you could say, the camp that we would bounce where we did. And I'll share that tweet as well. Let me just pull it up. I'll share that on the top bar before we keep going on this. But here we go. Victory lap, yes, but it's okay. Everything can be justified by just looking at the chart. So for me, we take a look. If you look at the top bar, you'll see the tweet. I like this low a lot, and I can give you some justification and some clarity as to why I believe that. And that leads into a point that I wanted to get to later, but that should really be the basis of really every trade that you ever take, right? If you can't justify the move, if you can't justify maybe why it might not work, right? If you fail, right, that's a problem. And again, I'm totally in the camp that every move that is made, every move that is, not made, can totally be justified by what is on the chart, depending on where you look, whether that's time frame, whether that's how far left you're looking. All of that really does play a factor into this. I know a lot of people don't want to believe that. You want to believe that the news that comes out about credit card default and all this crap is going to affect you intraday trading today. I hate to break it to you, but more often than not, it actually doesn't. And as you can see by now, do you really think that the market should be where it is right now based on everything that's going on, not only throughout the country, but throughout the world? right? So that really backs up my whole idea that all of this is driven by an algorithm. It's not, will you get human intervention? Absolutely. But to me, these moves are on the left. You can justify each and every one of them. And being able to see them is just something that takes time and practice. And to me, learning the right things, which I don't think many people consider. I think people fall in love with strategies that aren't profitable or successful. And at that point, you get stuck. And that's where a lot of people quit. But going back to this chart from the top bar you see up here, you'll notice that I have that little, pinkish red line right at 14,173.75, right? So at that point, that is a swing low. If you go over to the left and see where that line originated, right, that is a daily swing low dating back to probably about June. I think it was actually the last week of May, but that's our swing low from dating back all the way back there, right? Why is that still useful? Well, if we look at a higher time frame chart, we'll notice that higher time frame liquidity tends to create reversals rather than continuations, if you will, right? Think about it. For price to go from that red line, right? Let's go all the way back to that end of May point, right? From at that point, look where the market ended up going, right? So at that exact point, what had to have happened there, right? Let's just use common sense. Let's be, use some logic and try and figure that out. What had to have possibly happened at that point for price to move? What was that, about 2,000 points, right? Obviously, people were buying it, right? So when price decides that, okay, look, we need to go find some liquidity for us to make that next move higher or next move lower, vice versa, you're going to notice that upon taking out those higher time frame lows, you'll see those bounces, right? And if you can you look through each and every single one of these, all these little humps that you see on this NASDAQ chart. Every time we got a bounce, you look left, we've taken out higher time frame liquidity, right? So, so that was one. I saw the higher time frame liquidity taken out, and I was automatically interested at that point, right? Now, if you look a little bit closer, you'll see that there's a green box there, right? And there's a gap, right? So I'm not so sure how people are learning it these days, but the way I look at gaps is if we're gapping higher, right? To me, that's showing urgency to go higher, right? So if that's the case, we can view that gap as a level of support, okay? So, it's going to be more prominent on individual names, like if you're looking at a Tesla or I don't know, even SPY, right? Something that you get a lot of gaps of, not like futures where it's running 23.5. There's not much time for gaps to actually form. So if you're looking at an individual equity or, whatever it might be, you'll notice that there's a lot of gaps on the chart. And if you go back and look at those gaps, a lot of the time price dips back into them and it takes off, right? So I look at those as support levels. And on the flip side, if we gap down, that's showing the urgency to go lower. And from that point, I would use that level as resistance. So we also gapped up, creating that bullish volume imbalance. That's how I refer to those gaps, volume imbalances. So we had a bullish volume imbalance. We had higher time frame liquidity swept. And we also dipped down into our little golden pocket, that 62 to 79% retracement level, which we have a bullish range. I think that would be fair to say. Or, if you don't want to use the terminology range, you could say bullish trend, right? The smaller time frame or time horizon trends are not bullish, right? I think that would be fair to say from this point, looking at this exact image, right? Everyone can agree, wow, that's pretty bearish, right? But if we scroll left and we start to look at the bigger picture here, you're going to start to notice, oh, wow, we actually are in a bullish trend throughout this entire year, right? You might not feel that way because of all the stuff that's pumped out on the news, all the people on Twitter who just say things to say things. There's a lot of things that go into it that can really mess with the psyche behind all of these moves, right? You're automatically thinking the worst when we're at the low, and realistically, oftentimes that's probably the best time to be looking for that inverse, right? And something you could pair with that, obviously, is liquidity. It's a great tool to have in your back pocket, and when you understand liquidity, I think trading becomes exponentially easier. You almost feel like you know where price is going. So more often than not, you're going to feel like you are on side. So when your trade is running, you're not going to be so eager to just take your money and run, right? You're going to be much more understanding that, hey, I know things don't just go straight up, while it might seem like it on NASDAQ right now or even SPY, but I can be a little less aggressive on where my stop placement is going to be in profit, of course. But you can, go into it saying to yourself, okay, look, I have levels up here. Where's the draw on liquidity? What would it be? And at this point, you saw that I said 14,979, right? So at that point, what was our draw from that point? I felt strongly that it was going to be that 14,979. Why? Okay, so let's zoom back in, right? And we see that we have a bearish trend, okay, or a bearish market structure. That's how I refer to it. But so you'll notice from that 15,468 all the way down to that 14,140, right? You'll see swept that higher time frame low, got into the bullish imbalance down there in discount. Discount would be that below 50% of a bullish range, okay? Got into discount. Now I'm looking for, at that point, some sort of retracement back into discount of the bearish range, which you see that downtrend, right? Why would I consider that little move that we had prior to November? Why would I consider that a downtrend or a bearish market structure? Well, we took out lows in the process. So for every time that we take out a low, I'm looking to map my range and look for said retracements. If you go over a little bit left, you'll notice it's the same thing over and over, right? This is clockwork. Just go draw your fib from high to low. Look where price retraces. Discount, bearish imbalance, rejection. Let's do it again. From high to low of that second swing, retraces higher into where? Discount, bearish imbalance, melt down through the lows. Same thing for the third, and then the fourth, we're here, right? And this is where we kind of get the change of the guard. And again, how can I justify that? Well, we took out higher time frame liquidity, we got into a higher time frame bullish volume imbalance, and we're in discount of a bullish range on the year, right? So all of those things kind of came together, and after we got to that initial target that I had of that 14,979, I said to myself, okay, I'm neutral, and I have that in the tweet as well. So for every wizard call that I've had, I like to put it out there, so I'm not one of these people, like most people on Twitter actually, who are just going after the fact and talking about, oh, look at all these idiots who missed the bull flag, right? Okay, you could say that all you want, but where's your tweet? Where's your message sub, right? Everybody, it's so easy just to talk trash about it after the fact, but in the moment, where were you? You weren't there. I know that for sure. But anyways, so my whole tweet, you'll go back to it and you'll see I was neutral at that point. Why was I neutral at that point? I wanted to see us take that little swing high wick right over by that 50%. It's one little mohawk above that 50% there when we had that bearish imbalance. So you'll notice red box, little wick up there. So I wanted to see price take that level and hold it. And obviously, with hindsight, we know we did, and we've taken off ever since. So now it's like, okay, what's the next draw? I said it on Monday night. What was the next draw for me? And it was 15,858, which is our swing high dating back to September, right? So if you have an understanding of the draw on liquidity, where is the market most likely to go? Where are the most stops going to get smoked? And from that point, you know, that's liquidity is just money, and when you generate money, that's like gasoline for a car that's going to be able to drive that sucker. Without liquidity, the market is running on empty. It's slow, it's not moving quite as fast. And oh, sorry, Katie, I'll let you co-host here. Hold on. You should be good to go. Maybe not. Sorry. But again, having an idea of liquidity, go back on any chart. Seriously, go back on any daily chart, any 30-minute chart, any hourly chart, any higher time frame chart. Go for it. You'll notice that every time liquidity is swept on a higher time frame, you're going to get that bounce, right? And what would be the differentiator between just a Mando model where you sweep a low, you retrace back into a discount bearish imbalance, and you continue back in the direction you came from? The difference would be when you sweep higher time frame liquidity, I look more towards that reversal rather than my typical model where I would be looking for that discount retracement to actually go short again, right? So again, that's in short. I mean, the videos on YouTube, if you want to check it out. I mean, look, I try to post as many of these as possible because, again, it's just it happens every day. Everyone that I catch when I'm going back through the charts, I like to post them, and just so people can see. I mean, To me, again, we're trading an algorithm right here. So if we could pull up and get in on some of these little algorithmic tricks, to me, does that give us the upper hand or no? I would say it does. But all right, well, let me just introduce KD. KD's a great friend of mine. We've been trading together for about 3 years now. KD, what's going on, man?
Yeah, what's up, man?
Oh, geez, you got the worst connection right now. It sounds like you're in the blender. All right, we'll go back to KD in a second, but all right. So that's just ultimately where we're at right now. We swept higher time frame liquidity by taking out that 15,858 overall on the market. We gapped down actually to start futures today, very minimal, but if you're putting a gun to my head at this point, I think we get back into the bullish imbalance that we formed on Tuesday, and we dip into there, take out today's low, and we probably continue higher. Next point of interest for me at that point would be, let me just zoom in real quick. I got 16,112, and then after that 16,257, and from that point I think things can get a little tricky. We are definitely due for some sort of retracement. Is this the point for it? Not necessarily so sure. I think there are two more little draws on liquidity that we can sweep up into before any sort of retracement. I mean, uh, this is on NASDAQ. This is overall market, of course. I mean, there are some individual names that look really good right now. Specifically Tesla, which I mentioned over the weekend, Google as well. But I wanted to talk a little bit about Tesla right now because this is I guess, perfect play out of the model, and it was almost just a lagging ticker in based on NASDAQ. So, if you were to go to the top and you just slide one over, you'll see my Tesla tweet right there. You'll notice the original tweet that when I tweeted about it mid-November, we are dipping into that 62% retracement level. Why ever would be bullish in that specific point, right? So again, for every move that occurs, there's got to be some sort of justification. If I can't justify it, there's no way that I would even consider trading it, right? But in this particular instance, you'll notice on the sidebar, you see that 50%, 62%, 70, 79, right? So my fibs are dating back even farther, right? I'm using the yearly range at this point from the low. I'll get the exact date of it, but let me see, one sec, right here. So I'm using the low from April 28th to be exact, all the way up to the high that was formed on July 19th, right? So at this point here, what is the differentiator as to why I would be bullish in this situation versus where I would look for just another little pop and retracement back down? So in Tesla's case, very similarly to NASDAQ, you scroll left and you look on your daily chart back to May, specifically May 30th. We gapped up overnight, or over the weekend, I should say. And uh, that gap was left open for quite some time. So a lot of people also preach this, and I really don't understand why. But there's a gap. We're gonna go fill that gap. Yeah, maybe in 4 months. There's no set timetable for when a gap needs to be filled, right? You see it all the time, and that's what drives me nuts. It's like, just look at a chart, man. There's so many of these gaps that don't get filled immediately because again, what is a gap showing me? It's showing me urgency to go higher in this case, right? A gap lower is showing me urgency to go lower. I'm sure there's still a bunch of gap downs all over the market, especially if you look at some of these small caps. They're still there. They didn't get filled in, right? So anyways, you see that we retraced back down into that golden pocket, 62 to 79% retracement. Specifically, you'll notice we have that 195.12, which is a higher time frame swing low or liquidity. Following that, you'll notice that we got into that bullish volume imbalance, just like NASDAQ, just maybe 4-5 days late, right? Price bounces, we shift market structure. So let's go and zoom in just a little bit here on this chart, and you'll see there's one black box in there, right? And you might ask, all your other boxes are red and green. What does the black box mean? So that black box right there is actually a bullish breaker. So what a bullish breaker is, or what it looks like, I should say, is a low, high, lower low. Specifically on that lower low, you want it to take some sort of higher time frame liquidity. As price recovers and moves higher, we take out that high of the breaker, and when price retraces back into it, held onto it for dear life, we take off, and there's our little continuation. Now, for my model to complete in this specific instance, that would show me Tesla at 299.29, which is still 50, what do we finish at, 242? Yeah, about 57 points away. Is that necessarily going to happen next week? Whatever. No, but I feel pretty good about that being the ultimate destination for it. And at that point, I mean, I think that would have to carry us into later on next year. And that's when you get into the discussion. What do you think comes next? Do you think there's going to be some sort of epic stock market crash going into 2024 or even during 2024? And to me, I would say I highly doubt that. And the reason why I highly doubt that is because we can't forget that there is something going on in 2024 that would be pretty detrimental to the current placeholder, I guess you could say, and that would be the presidential race, right? So, if we talk about this and everybody can all agree, oh, the market, it's all manipulated, blah, 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 this, that, the other thing. Do you really think the most powerful man in the world is going to just stand by for something that crazy to occur during that time period when realistically, if he wants to stay in power, he's going to need that thing to be doing well? That's always a talking point. Think about 4 years behind. Oh, stock market all-time highs, this, that, right? 4 years before that, same situation, right? They don't want to be going into an election period where the market is at, crashing or in danger of crashing, right? What happens beyond that, who knows? I'm just thinking back, even just over the last couple of years, the people that have been waiting for the crash to occur. I mean, they've really been waiting, right? This thing is not going down without any sort of fight. And that's why I think it's just so controlled at this point that it would be quite difficult, especially heading into an election year for something that dramatic to happen. So to me, from the looks of it here, I'm still seeing a lot of nice names right now, Tesla being one of them. NVIDIA is another one that I've been kind of keyed in on. Now, NVIDIA is actually really interesting, and the reason I say that is because this is a little more immediate than anything else that I would be looking at specifically. But with NVIDIA, if you take a look at I'll look at it on the 30-minute chart here. We left relative equal highs this morning. So relative equal highs, the way that I look at that is 2 attempts, right, to take out a specific high, right, and the wicks are even, right? Think about it. So, and in this example, I guess, let's look at the 8 o'clock candle and the 8:30 candle. So price ran into a brick wall at that 8 o'clock candle. And then the following candle, we went right back up towards it and no luck breaking through, right? So to me, what that would tell me is somebody began a large type position right off that 8 o'clock candle, and following, it was almost like a double down. So when price got back up there, they doubled it down to really send it lower. And, NVIDIA ended up down like what, $7.68 today, right? But how is this tradable, I guess you could say? Well, if we look at our overall range, we go back towards Friday morning at 4 a.m. So right when market opened at 4 a.m. in pre-market, we set a low. And from that point, we kind of ran up with no real retracements until, again, this morning. Obviously, today's move is pretty sharp and to the downside. But you'll notice a 1 o'clock low wick that we had, right? So at that 1 o'clock low wick, what did price do? And if you're actually charting along with me right now, you'll notice that hit right off the 50% mark of this range, dips a little bit below it down into discount, and specifically a bullish imbalance in discount. And from that point, we made a large wick back up, and we started hanging out. We finished about $4 higher from that low. Now, to me, for the completion of what I would see, or my model in that sense would be that move back up towards those relative equal highs that we have at, what price is that? 501.89. And we also have that all-time high mark at 502.52. So I think that's really where the draw on liquidity is for NVIDIA specifically. And that's really where I'm looking. What else? Oh, we do have one bearish imbalance in the mix right there. But again, if we are bullish and in a bullish price range or bullish trend, do I think that would be an ideal location to try and short something? Not necessarily. Could price slow down in that vicinity? Absolutely. So that's why, you can use these little tidbits, these imbalances, these draws on liquidity, all of these little things. You can pair them up, and you can almost think to yourself, okay, look, we have a pretty big imbalance there, and it's about $3 wide. If I'm trading a 0 DT and price gets up into there, it might slow me down. It might chop up my contract, and from that point, I might not make as much as I believe, and I could still be right. We could get that push towards the end of the day, but if my contract's melted down, what good is that, right? So having that in the back of your head or back pocket, it's very helpful. This happens quite a bit, actually. I mean, today for my trade that I took on NASDAQ at 2 o'clock, I'll post it up on the top bar right now so you guys can see it. I sped it up like 20 times. It took forever. It was like a 20-minute trade, and anybody who's traded with me or been in the group with me, they know that oftentimes I don't really like sitting in them for that long. Uh, my ideal trade is get in right before the move and be done with it relatively quickly, because I want that low resistance liquidity run back up or down to whatever the target I had prior to entering the trade was. But again, just looking at that trade from today, you'll notice that right where I have that limit order to take profits, not the STP, but the LMT, that little logo that you see on there, it was right inside that bearish imbalance. Now, look, could we have gone through that? No problem. Absolutely. Right. I've seen it happen before. I'm sure it'll happen again. But in terms of how long I want to hold a contract, I know there's no theta on futures. I get it. But at the same time, do I even want to sit there and watch price chop around for a little bit to balance that price range? Or would I rather just take my profit and move on with my day? To me, that was ideal. I pretty much hit every goal that I had for not only the day, but the week as a whole. So I told myself, okay, look, that's my target. I'm gonna, I'll put my stop loss right below the previous candle's low, and from that point, I'll call it quits. Right? I ended up getting stopped out, which is fine, and that's usually how a lot of my trades do end, because, rather than let it, run into my take profit and potentially continue going, and then I'm gonna be pissed off about that. That's gonna ruin my own psychology. I'm just gonna continue to move my stop aggressively once I get to a specific point. And to me, the ideal, I guess you could say, uh, point where we start to look for profit taking, I automatically start at 20 points. If I can hit 20 points on NASDAQ 3 times a day, so 20 points, it doesn't seem like all that much. NASDAQ moves hundreds of points a day, right? If I can nail 20 points 3 times, so 60 total, that's going to add up, and that's going to be about $1,200, right? Uh, that's fine with me for a day. I don't know about you guys. You guys might be different than me, but if I'm able to nail that, that's more than fine for me, right? Recently, I don't want to say that I've changed my idea, but it's been more of 2 times a day if I can nail 30 points. And those 2 times, again, just to echo what I had said earlier tonight, but 10 to 11 a.m. Eastern and 2 to 3 p.m. Eastern. Those are the silver bullet hours. That's a ICT concept that I've really found that I like a lot, and it often pairs with my own model that I've created that is derived from those concepts as well. But they line up, they match up. You feel confident in the trade, and for whatever reason, I wish I could give you a concrete reason as to why this happens, but every day from 10 to 11, from 2 to 3, a move occurs, right? And oftentimes it's immediately after reaching either a bearish imbalance, bullish imbalance, a bearish or bullish order block, a bearish or bullish or breaker. I'm sorry, bullish or bearish breaker. Whether we swept liquidity, whether we're using an inverse fair value gap, which was my first trade of the day today. For whatever reason, I don't know if it's a time where clearinghouses kick in or whatever. I couldn't tell you. All I'm telling you is watch those times and you're going to be pretty amazed. It's pretty amazing. And that's why a lot of the times when I do go on live and trade with everybody, it's during that 2 to 3 hour, because throughout the rest of the day, could there be setups? Absolutely. But I feel really good that from every time I look at the computer from 10 to 11 and from 2 to 3, I'm going to get a pretty decent setup that I could feel pretty good about and not really have to sweat too much. Sometimes you'll see a nice setup during the lunch hour, so from 12 to 1:30 Eastern, and you automatically think, oh, look at this setup, it's beautiful. And then you get in it and you're just sitting there for an hour and a half just waiting for this thing to go. um, to kind of avoid and eliminate that, because look, you might be right, but if you're sitting in that for that long, depending on what contract you're trading, of course, but if you're sitting in there for that long, then your mind starts to work too much. And when that happens, me personally, I don't want to say that it didn't end well, but it just drove me nuts. And then you're psyching yourself out for no reason. You might be right. It just might not be the good time of day to take whatever specific trade or setup that it was. So, again, there's a lot that goes into, all of these concepts, but nothing that not everybody can learn, I guess you could say. I think if everybody puts in ample time, and what I mean by ample time, it's not just, oh, okay, I'm just gonna, I'm gonna look at the chart for a little bit and see if I can pick up anything that sticks. Have some, fabric behind it. Like, bring some sort of idea into what you're looking for and see if you can identify it for yourself, right? As nice as it is, like when we do our live calls and everything like that, I'm going through and I'm charting everything, and I'm kind of speaking my mind about whatever it might be, and we go back, and at the same time, I'm like, it might have been more beneficial if whoever had asked me for said ticker did it themselves, and then we went through it together. I mean, I think that's almost like that next level. Like, of course, it's nice to have somebody that you can say, hey, look, does this look good? What do you think about this? That's a great feeling. But if you don't feel like you're independent and you can't do it yourself, to me, that's it's a little problematic. At a certain point, you're going to want to, remove the training wheels and feel good about doing a lot of this stuff by yourself. Um, we got into it a little bit last week, but actually, before I get to this, if anybody has any questions or anything you want to come up and speak, just hit the mic. I'll bring you up. But this goes back to something, anyways, that we talked about last week, and I just want to echo it, because I think this is the true downfall of the trader, and this is you're always seeking some sort of alert or some sort of guidance, and you just can't make decisions on your own, right? So think about it. If you're taking somebody else's call outs or something, which I do not do, by the way, I will never do anything like that. I think it's the worst possible thing. I've been in that situation and it was not helpful, so there's my reasoning. But in addition to that, you're always going to be relying on someone else, right? You can't make decisions for yourself. So when the time comes and you're up X amount of dollars, and you don't know if you should sell, you don't know what you should do, right? And you get smoked, and you give back all of those beautiful gains that you're screenshotting and sending to your buddies, this and that, right? Telling this guy that or girl that they're great at calling out trades and stuff like that, and then you turn around 5 seconds later and your trade is roasted because you don't have the basic conceptual understanding of what it is needed for this trade to succeed. Where is that terminus level? Where is that ultimate profit taking level, right? You don't know. You're just hoping somebody else puts it in the Discord chat that they're sold or something like that, right? And oftentimes when you're in those Discord chats, it looks good when you could post these big, these big profit gainers and everything like that. So they, who knows, they might have sold it at a certain point and they didn't tell anybody because they want the number to be bigger just in case. But they're not even in it for that. They're just covering their ass just in case, right? That happens all the time. Uh, I've been a part of them too, so I know the inner mechanics of how some of these things work. Or how about maybe a delay, right? Maybe a delay. So somebody calls out some sort of alert, right? Maybe it takes an extra minute to get in, and maybe they've been parked in this thing for about 5 minutes prior to even posting it, and price goes up pretty decent, right? Uh, then you get a message from the person in the chat. Oh, I'm out 20%. Let's go. And they're happy with 20%. Maybe that 20% to you is like $10. And you're like, oh my God, I just wasted my buying power on this. Are you kidding me? Right? Now think about it. You go through something like that. In your head, what are you telling yourself? Oh no, I still got more buying power. I gotta get some more. I gotta get some more. A, maybe you hold that trade, maybe you get smoked even more as a result of that. B, you might even say, okay, look, I'm gonna go look for something else. He called out AMD. I'm gonna go look into NVIDIA and see. Um, so, and maybe it doesn't work out. So, and then who are you gonna blame? Instead of just taking the L for yourself and understanding, hey, look, I was wrong. It's okay to be wrong. Everybody's wrong. That's a part of it. But uh, when you can't accept that, I think that's just a huge societal problem that not only traders have, but literally everyone. Anytime something goes bad, you automatically want to point and blame something else, right? Instead of just saying, I fucked up. It was on me, right? I screwed up. I'll be better next time. I know. Maybe you learn from your mistakes. Maybe you journal something. I bet you 90% of people don't even journal their stuff anymore. I think that was a really important thing for me to do when I started to really turn the corner, was actually write down things. What were some tendencies on a CPI day? What were some tendencies that happened on an FOMC or a non-farm payroll? Those things help so much, and it's so underrated. You might think about it and you might say to yourself, oh, everybody's always talking about, oh, CPI this, FOMC, non-farm payroll this. A lot of the times the days before that are the shitty days to trade, not the day itself, right? Think about it. You go back and what was it? I mean, even this Monday, we had no high impact data driver, right? No news that could really move or affect any sort of, market infrastructure, right? You got nothing. There were no setups on Monday. I went back and we did it on Monday night in the live call. We found, maybe one setup the entire time. Really? I mean, or for at least what I look at, maybe one setup, and even then it was probably slow and probably choppy. So um there's just certain days that you put that in a journal, you revisit that at the end of the week, and you see it for the second time. Oh, the day before CPI was trash. I'm not even gonna look. It's gonna be a slow chop day. Or usually the days before Powell, when he comes and talks on Wednesdays for FOMC or minutes, whatever, um, those are usually crap days too, right? But you can have those days where they're quote unquote untradeable, and then you get the actual CPI day, and yesterday was outstanding, killed it right real quick too. You can make your money in that day and make up for maybe on Monday. I think I took one or two trades on Monday, and I don't think I made all that much money. I'd have to go back and look, but Tuesday and Wednesday, I'm done. I'm done for the week. I really don't have to do anything. So this week, the rest of this week, I can be ultra picky and, not have to, press or stress any of these trades. I can just go do it, do what I got to do and be as precise as possible. Maybe even keep that stop as small as possible in these specific situations. Because I know, look, I'm now at this point, I don't want to say I'm playing with house money, because I'm not just going to go out here and lotto stupid crap, but I'm going to maintain. Okay, do I see a setup? If there's not a setup, I'm going to shut this thing down and I'm going to go play Fortnite or watch a movie or TV series, right? You could do that too. That's a beauty of it. Or maybe if you're going to work, you know what? I don't need to focus on this. I can knock out maybe some stuff I got to do next week, crush it this week, and then come back next week. I got more time and I can look when I really have to start looking again, right? So ultimately those are just little things that I guess you could say. I didn't really get into the things that drive me nuts, and let me just answer some of these questions. I see there's a couple chats in here, and we'll look at these before. I'm gonna have to listen to the recording after you're done. Oh, all right, you got it, man. uh James, so today QQQ swept liquidity from July 19th. Is that an indication it may retrace? And if so, do you play the retracement or just wait for the fib level to? Excellent question, James. I hope you're still here. Sorry, man. Yeah, this is a great question. Okay, so yep, ultimately the entire beginning of this, when we were talking about the market as a whole, specifically tech, the first, I guess you could say, first topic that we spoke about was when you get higher time frame liquidity swept, you would look more towards a reversal versus a a retracement. So what's like a dead giveaway to that? Because it could be scary, right? Think about it. If you're going into, I don't know, any sort of liquidity, whether that's buy side, which is overhead, or sell side, which is below you, one of two things are going to happen, of course, right? You're either going to continue higher, break out, or you're going to, reverse, right? Whether that's a breakout up or down. I'm trying to not speak in one specific direction, but you're either going to get a breakout or you're going to get a reversal, right? How can you tell? So to me, the ultimate, guiding force of the North Star in this situation would be, do we get some sort of imbalance following that liquidity sweep? Okay, so if, for example, the one that we looked in towards the end of October, immediately after sweeping that liquidity, what did we do the next day? We gapped up, right? That is a bullish imbalance, right? So that offers a little bit of assistance there. In this particular instance where we're at right now, we also gap down to open on futures. So was it completely out of the realm to say, oh yeah, we I don't know, gapped up, or we gapped down? I'm starting to look for this imbalance to complete. So in this particular instance, I'm looking at the daily chart. I'm just going to let the daily chart finish out for the day before I jump to any serious conclusions. Is the market going to go down 500 points tomorrow? I doubt it. If it does, so be it. But I would rather have that extra little layer of confirmation that we are actually going to continue lower. And I'm on the other side of this as well. I actually don't think it's over. So, I would not be surprised for yesterday's low to get swept, maybe even come down to the midpoint of that imbalance that we formed on Tuesday, which is still about 110 points lower on NASDAQ. So probably, I don't know, maybe 4 or 5 points on SPY, before we had one more leg higher. And from that point, again, once if we were to get up to that 16,257, which is the swing high dating back to July, so it would be like yearly high. From that point, am I automatically going to just jump into a short? No, I'm going to wait and see. Give me one imbalance on the daily that'll confirm itself, right? Because, although we did gap down tonight, we could very well get back into this bullish imbalance that we have right now directly below us, take out the low from yesterday, and take off back to the upside. Very, very possible, right? So, I try not to jump the gun in that situation and automatically just think, oh, I'm going short. We swept some sort of lower high, right? I'm thinking, I'm trying to be, methodical about it and not just automatically jump into something without some sort of, justification as to why I would trade it, right? Every move has got to be justified, right? Okay, so Riley just said, I hope that helped there, James. Oh, one more thing on James, actually. So, James, if we were to create some sort of downside imbalance tomorrow or, the next day, whatever, from that point, I'd have my range low set from that October low, which was probably the last week. Let me just get the exact date. Yeah, October 26th low. And I would be looking towards the high of my fib mapping to be November 15th, right? So if we are to get that retracement back down into discount, I have a bullish imbalance right off that 50% at 15,095. I have another one at the 62% retracement, and I also have one down here at 79%. So there's a lot of support down below, right? On the flip side of that, we have a bullish breaker on the daily, which is the breaker candle is from October 12th. You'll notice we got up into it, retraced back down to the low of the breaker and took off. That's pretty eye-opening. So we held that already. Personally, I'm thinking that we do move higher. And the reason why I think we move higher is because with that being the case, we're also extending our range just a little bit, right? We're continuing higher. So to me, I'd want to see that bullish breaker on the daily get right into that 50% level. And we're going to have to go a little higher for that to happen. So I'm just looking ahead. Again, I'm not trying to jump to any conclusions just yet. Um, when we're shown that, okay, this might actually be the top, because we don't know, right? That's another thing that just really quickly, do we know what the high is, or do we know what the low is going to be exactly? Maybe not. You could feel real good about a specific low or high, right? Like I did back here at the end of October. I felt really good about that low. Did I know for absolutely 100% certain? No. We could have went one tick below where we were, and I would have been stopped out, right? Um, and that's the difficult part of trading. A 5-minute chart, when you're looking at an overarching trade that's occurring in front of your eyes, right? This is a daily time frame type of trade, and we're trying to look at it on the 5-minute chart. It's going to be a little more difficult to actually pinpoint and snag those highs and lows, and that's why I just wait for the imbalance. Same exact way that I look at them from like a 5-minute chart, right? If we sweep a higher time frame low on a 5-minute chart, I still need to see some sort of imbalance to the upside, right? Just because we sweep that, we come back up a little bit, doesn't necessarily mean that we're not going to come back down one more time before actually making the move higher. And in that case, you're stopped out already. So I'd prefer not to get stopped out all over the place. All right, Riley. I got absolutely rinsed trading Monday. Lesson learned: no more trading pre-CPI days. Yep, power of journaling, man. I'm telling you, I should probably continue to do it. I don't do it as much at this point, but it can be very helpful for somebody who's kind of trying to find out, those time staples as you're kind of going through, your journey. But this whole week in general has been a lesson for me. I've been forcing trades, handing money back to the market. Looking back, I've seen one good setup this week out of my 10 trades. Okay, yeah. So, Riley, one way you can look at this is, obviously it sucks to lose money and everything, but again, just go back. You can note the way that you're feeling right now, and when you're noting that, you don't necessarily have to say, oh, you suck, you effed up this whole week, blah blah blah. No, you don't have to do that. You could say, hey, look, like, this is a terrible feeling. I feel myself going down the wrong path. I know it's happening, but I can't seem to, I think this is the one. I think this is the one. um in those types of situations, one thing that you can do, and something that's helped me a lot in the past, is just focus on one setup, whatever it is. And a lot of people, everybody can say this is a cliche answer, but, or, do you have a repeatable model that you can do over and over again and feel like you get pretty good results out of it, right? Can you back test that thing over and over again and see that the same type of, candles paint, or the same type of results continue over and over again, right? So, as much as, anybody in the group might feel that, oh, Mando, he just, like, he's posting his Mando model and just trying to, like, force it down everybody's throat. I don't give a shit what anybody trades. Do whatever you want. I'm just showing you that this is something, or having some sort of model and something to back your trades off of. It's a great feeling. And when you could post them post them anywhere, or you can write them down, maybe print them out. I don't care. Put them in a notebook. And you see, when you start to see that things happen over and over again, that's not only going to, obviously your wallet's going to appreciate that, but also mentally, you're going to feel so much better about yourself, because all that work that you're putting in is working out. And again, it's something repeatable, something that you can justify, right? Um, let's see. Tessie to the moon. I like Tesla. So puts. You must not have heard anything that I just said. Um, Sorry, man. I don't know if I can help you then.
Yo,
Yeah,
Mando.
yeah. What's up, KD?
Rhett Summers says, "Hey, dude, in the Discord, I just posted in the Discord asking this question. Could you run through the explanation for the mindset of a turtle soup?"
Oh yeah, for sure. Summertime. What's up, man? Before I get into that, it's a little long-winded. I just want to make sure I hit on. There's only. Let me see. Only one more comment. Let me just get to this one more comment, and then we'll smash the turtle soup. All right. Well said. People fail to own their trades, then turn to hold someone else responsible for a failed trade. Yeah. I still haven't gotten into what I really want to get into, because some's really pissing me off, and just want to get it out there. But we'll get to it after the idea of turtle soup. So let me just see. Can I get a quick example? Let me just try and cherry pick a quick example of what I'm talking about here, because This in itself, specifically people who are trading, using the stuff that I do as well. You're going to notice that this is really helpful. So let me just zoom in. I actually see one right here, and I'm gonna post it, and then I'll pin it to the top. Just give me a sec. Ready? Right here. Okay. So, in short, for anybody who hasn't watched the video on the model that I use and the one that I essentially 90% of my trades are coming from this specific model, but essentially all I'm looking for, and it's quite simple actually. I'm looking for a market structure shift. Okay, so for example, if we take out a swing high, to me, that we are now in a bear or bullish market structure. Okay, so taking out a high, a lot of people think, oh, we're going to reverse, and a lot of times it does reverse. But what happens? It retraces back down into discount, and then it rockets right back up, taking out another high, and your puts are roasted, right? Again, just another staple of the market. And again, if you don't believe me, check out the channel. You'll see there's probably 40 examples at this point. I just opened up the thing 2 weeks ago. Right here, let me post this, and this is going to have no other imbalances or anything like that. But going back to the model, I'm looking for a market structure shift, bullish or bearish, don't care. I'm then looking for a retracement back into 50%, or in the bullish case, below. So 50 through that 100. And then on the flip side of that, on a bearish market structure, so we take out a low, I'm looking for a retracement back into discount, so 50% or above. That way, the RR, risk reward on the trade, not only it makes sense, but even on a loss, it's well defined. Where is my stop loss going to be? It's just going to be above the imbalance in that specific region of the chart. That's it. Keep it as simple as possible. But here, I'm posting this sucker up right now. And when, this is a good question actually. When would the Mando model not work? Because if the Mando model worked over and over again, completely, the market would only go in one direction, because all we're doing is making a new high, retracing back down to discount, taking another high, retracing into discount. We would never be going lower, and we obviously all know that that's not the case, right? The market goes both ways. But the way that you can combat that is go on a higher time frame. I like to use the hourly. And if we take out an hourly high or low, rather than look for that retracement, I'm actually going to look for an imbalance in the inverse direction, and actually look to short that for lows, which would also be considered a turtle soup. But here, I'm posting it up right now so we can get into it, Rhett. And I know Mo, I don't know if Mo's in here too, but Mo, you've been killing it, man. I'm happy for you. But I want to just really show this to you really quickly. So, all right, just tweeted it. I'm going to pin it up to the top while it's posting. Let me just scroll through one more time. I use a lot of hidden divergences to trend continuations. I don't, if you would expand on that, Manny, for sure, just comment. We can get to that after, but where are we? Oh, we're all good. Okay, post is up. Let's go over to here and share it. Here we go. All right, it's going up top. So here it is. You have the turtle soup, and I know I've talked about it a little bit. And early on, when with the group, we had a lot of people who were, they'd also been learning this stuff, shortly after me. So they had a pretty good idea of it. So we really haven't talked about it much since then. But first and foremost, let's just look at the overall chart. Again, let me just point this out. You're going to notice that I have fibs on the chart. I don't trade off of fibs. I really just use them to map a specific range for me. And what I mean by that is, of course, nobody wants to buy anything at premium or overpriced, right? You want to buy discounts. So when you look at an overall range from 0 to 100, you're going to want to take trades where even back to the high of that range, you're going to be scoring more than half of it, right? Everybody wants that discount, no matter what it is. So in this specific instance, we have a bullish market structure. So check that low that we made, and you'll see that's where my one line is. Okay, so from that swing low, why is that my low? What was the price run that started us moving through that swing high right before that 9 o'clock candle? Well, it was that low up to the high that I have indicated right up there, right? You could say, oh, well, we made the high, about 7 candles to the left. Why didn't you use that one? Well, that retracement that we made, that little pullback before that next move higher, we actually never got back down into discount of the range. So if price doesn't get back down into the discount of the range, I discredit it. The range isn't set yet. I need to see that range is actually going to be set. And in this situation, how did I know the range was going to be set off of that high candle? Let's look just before 11 o'clock. So right before that high wick where I have my fib, you're going to see the next candle was a bearish imbalance to the downside, right? So that first black candle after that wicky one that I actually have the high fib line on, you're going to notice that on either side of that black candle down, there's a specific region of that candle that doesn't have wicks on either side. That's a bearish imbalance, okay? So that's why I don't need any indicators, none of that. I think it's all useless, but that's for another time. But you'll notice price retraces lower. You get that bounce right back into that bearish imbalance, and you get the flush, and we get back down into discount. Okay, so from that point where we get back down into that specifically, we wick that 62% perfectly. If you zoom in on that, you'll notice absolutely to the tick, and that's why say what you want. It's too perfect to be sloppy, and by real people in my opinion, but it's got to be a computer. But anyways, we bounced the first time. Now this is where the turtle soup comes into play. Okay, so immediately off of that retracement back down to 60%, remember, this is my model, this is what I trade over and over again, and I guess you could say the turtle soup is just a extension of my model in a sense, right? So following us retracing back down into that 62% level, right, we bounce, but we don't quite get up to our location where we would typically look to take profit, which is that swing high. And at this point, it was 15,903. Okay. So the fact that we didn't get up to that 15,903, what does that tell me? Okay, we don't have enough juice, right? We don't have enough juice to get up there. So how are we going to get more juice? We're going to go back down and take some liquidity, right? Did market structure ever change in this instance? No, that swing low has not been taken, right? That 15,790 has not been taken, right? So you'll notice, and I'm going to pin the actual trade. I posted it yesterday. I'll pin that up there too so you guys can see it. But look what happens immediately after taking out that swing low right there at that 62% retracement level. We wick down and immediately bounce. So all we're doing is sweeping liquidity, and that gives us enough gasoline to get up the hill and take out that swing high. So that's, I guess, the idea behind turtle soup. Now, again, yesterday, let's go back in time and look to our left. That whole run up that we had, did we really make any bullish imbalances in the process? No, I don't see any. All I see is 2 bullish order blocks. That's it. No bullish imbalances whatsoever. So was this really an ideal trade for me at all? No, not really. Did it work? Yeah. Is it the best setup that you're going to get? Nope. No bullish imbalance in discount. So you're going to say, oh, well, you're telling us this, and then you're still taking the trade. You're hypocritical. Well, what time did this turtle soup happen at? Going back to the first thing we talked about. 2 o'clock, right after that 14, right? 2 o'clock. That is our silver bullet hour. And there it is. Silver bullet perfectly. And now I just pinned the trade up top that I took yesterday off of this turtle soup here. So how is it actionable? Okay, so you have an idea. Okay, we're going to sweep those lows and we're going to take off, right? In the process, we're also going to form a bullish breaker, which if you look right above that 4 o'clock candle, 4 o'clock, I'm sorry, 16, go straight up. See where we bounced there? You might ask, oh, where's the justification for why we bounced? Look to the left, and you're going to see we have a low, right? That first low right around 12 o'clock, that high right around 115-ish, right? Down to our second low. When we take out that high after making a low, high, lower, low, what does that create? Bullish breaker. Price holds the bullish breaker and continues higher. Now, in addition to that, you're also going to have this. I'm just going to chart this real quick because it happened again, and this is just another example of my model in itself. This time even more clean than the last one. Because the last one you needed a little turtle soup. Hold on, ready? Right here. Here is our bullish breaker. Hold on, I'm sorry. I'm just charting this up real quick so you guys can see it. Because once you see it, you can't unsee it. Ready? Oh shit, hold on. Boom. Okay. Here it is. Okay. Right here. And obviously we ran up even higher than what I'm shutting this chart off at. Ready here. Okay. I'm posting it right now. How does everybody feel on that? You feel like that makes sense? If it doesn't make sense, I can explain it. Okay, so I'm posting it right now, and we'll go back to it. Let's just see. Oh, Katie, you want to look at Rivian? We can do that too. Hidden divergences. Yeah, so Manny, I'm just seeing your tweet right now. I don't use anything that you use on your chart, man. So it might be a little difficult for me to comment on that. Where is oh, you feel good about that? Oh, cool. Nice. Jim Burke, cool, man. Kyle, you believe in the 70 or midway between the golden pocket? Yeah, anything inside that 62 to 70%. Often, there's a lot of times actually we're not even going to get far below that 50%. If you got a bullish imbalance right there, there's a chance we bounce there as well. Just anything in discount. Think about it. When you're buying something, you do not want to overpay for it. So the setup can be the most bullish setup in the world, but if you can't get in a discount, oh, James, makes sense. Good. Okay, ready? So now here's our second part to that. After our turtle soup, after the trade is complete, we break through the high, which you'll see in the video that I did. We broke the high, and I ended up taking profits at that point. Now I posted another one, and it should be up top right now. Let me just make sure. Yeah, there it is. Good. Okay, so now following that, technically, did my model work? Yes. Was it the most A+ trade setup? No, there was no bullish imbalance in discount. Don't feel as great about that. But again, we had that swing low and we turtle soup. Why he calls it turtle soup, I have no idea. Don't ask me, ask him. But the idea of it is a lot of times you're going to get that long wick down below it, scare everybody out. That wick is going to give you a heart attack, and then it's going to rip in your face, which happened yesterday. But anyways, following that, after we take out that high, you're going to notice all I do is just move my fib to the next low, right? So now my low is at that 1 because we took out the high. That's a bullish market structure shift. Okay, so I'm going to continue on with the Mando model from low to high. How do I know this high is set? I'm not going to short it up there, right? I want to see actually show me that it actually wants to go lower back down into discount. Where did it show us that? Well, we made a bearish order block, which is let's see, the first red candle or black candle after that long green run up that we had, right? So that closing down, right? And the previous candle is a green candle that's up close, and the down close candle after it. I think some people call it bearish engulfing. I don't know. I don't care, but I call it a bearish order block. So you'll notice the bearish order block turns to reject, and there's your imbalance. Bloop. Right back down. Where does it hold? Bullish breaker, and also dips into a discount, bullish imbalance. Now this is a setup I like. Okay. Look where that candle, that low wick green candle, right? Look where it closes. Opens up, and look where it closes. Ain't that amazing? Right on 50% of the range. And you're still trying to tell me there's no algorithm that perfectly delivers price like this. Come on. It's too perfect. It happens over and over again. It's every day. And that's why I post it in the group chat, because it happens all the time. It's just you won't believe it until you see it all the time. And once you see it, you're not gonna unsee it. So that's why I keep posting it. And I'm not trying to be annoying. I'm not trying to be arrogant or cocky or anything about this. These are not my concepts. I didn't create any of this shit. Okay. The only reason why I feel so strongly about it, and the reason why I show it to other people, and when they ask about it, is because shit works. I've shown endless examples. I've done endless live calls showing it. After the fact, I do it live. I screen record my screen when I'm taking trades. I don't know how else to, not that I really care. I really shouldn't act like I care so much about it, but I do feel strongly about it because it had such a good impact on me that hopefully it helps other people, and I feel like, this is years, almost 2 full years of me studying this crap, this specific crap. That I feel at this point, I could tell it like the back of my hand, and I really truly believe that any move that occurs on the chart, I don't care what it is, pull up any chart you want. I can tell me, go ahead, comment them right now. I don't care. Comment any chart and say, okay, what happened to blank on this day? Why did price bounce? Why did price reject here? I guarantee you I can give you some sort of explanation in my own terms, of course. You might not agree with my terms, but I'm going to give them to you in my terms. And from that point, if you believe me, great. If not, I'm sorry, but I feel like I can give you a perfectly valid explanation as to why price did one thing or price did the other. And that's why I think reading price action is far and away the best ideology that you could use when you're trading the stock market, bottom line. But anyways, sorry, got off track. But look, we got into that discount bullish imbalance. What do we do? Took forever because this is after hours trading, but guess what? We still took out our high, another bullish market structure shift, and so on. So at this point, if I were to continue on, I don't necessarily know. Let's see if it worked again. And if it didn't work, how can we justify it? Let's see. Oh, okay, it did. All right, I'm not going to be annoying and post it, but if you want to see it, go on your 5-minute chart on NASDAQ and go from this point yesterday when we took out that high at 2140 and draw your fib from the low to the high, and you'll notice we retrace back down into discount and make a new high. It happens over and over again. It happened 2, 3. Now, 2. We didn't get down into discount in the third time. So it happened 2 more times overnight before. What did we sweep this morning on NASDAQ, or the market as a whole? What did we sweep early on in the morning? We swept the high from September 1st. We also got into a daily bearish volume imbalance, and from that point, we rejected, and so far we are well below that. But oh, cool. Ebrima, what's up, man? I see you came up as a speaker. Thanks for letting him up, Katie. I didn't see the request there. Okay. Abrima dropped off. Let me just see. All the expectations that market will go higher from higher HTR analysis, correct? Otherwise, you look for bearish confirmation before playing short. Yeah. So, Cajun, great point here, because I actually spoke to somebody about this earlier. But so something that's pretty important to me, and I think this is something that helped me kind of elevate a little bit, was understanding that you can actually form a bias in a higher time frame by looking at a higher time frame chart. One, there's a lot of people I completely could not disagree with more when they say, oh, don't be biased, trade what's in front of you, yada yada yada. You know how helpful it is when you have a pretty good feeling that you know where price is going to go? It hits different. Trust me, you should try it. Feels real good when you have a good, strong feeling that you're actually on the right side of things, and you have an idea of what the draw on liquidity was. Ask anybody in the group for 2 weeks now. What was the draw we were talking about? we've been saying it for 2 weeks, and a lot of other people agreed with me in there too. Um, you know, we all felt pretty good about it, and at that point, we weren't looking for those bearish setups. Can you make money to the downside in a bullish trend? Absolutely, but uh, when you think of it this way, let me see if I can cherry pick a quick example. If we were to look at, yeah, all right, cool. I don't know. This isn't the greatest example, but it could work. Go to the hourly on NASDAQ. KD, I don't know why it says we got some sort of request or something. Hold on. Let me see if I remove you as a co and I invite you as a speaker. That might be better. Um, let me know if you could speak now. I don't know what is
Yeah, I'm good. I can speak.
Oh, cool. All right. Yeah, so I mean if you look at like an hourly chart right now on NASDAQ, while ultimately, like what do we feel is our higher time frame draw? Well, I start every week, every Sunday, I go from week down. At the end of the month, I'll actually incorporate the monthly chart as well, but I don't look at the monthly chart until after the monthly candle paints, right? So I kind of break it down this way. So initially, I'll go weekly. So automatically off the bat this week, I noticed we broke above the high of October 9th, Monday, October 9th, that week. We took that high and we stayed above it. Okay. Now on Monday, you can't make this up. Ready? I'm going to screenshot it and I'm going to post it. Again, this is not, I'm not making anything up here. I just want to show you how precise and how accurate this is. Okay. So on Monday, I'm sure a lot of people got lured into the downside thinking, oh, look, we're already starting to reject. Haha, like I got in my puts. I'm about to catch a nuke here, right? Check this. So if you look at the weekly chart, you'll know where we just swept liquidity. Okay. Now, let me just post it and I'm going to bring it up so you guys can see it like I'm seeing it right now. Right here. Boom. Okay, so it's on the top bar now if you want to check out that weekly. Ready? Boom. And look where price retraced back down to before bouncing. Come on. Come on. You can't make it up, man. Are we kidding? Look at that wick. What was the high that we took out last week that was our draw on liquidity? 15,468.75. Where did price retrace to on Monday? 15,468. And we bounce. So we're holding above previous level of liquidity. Ain't that something? That's crazy shit, right? And nobody would ever think about anything like that, right? Until you start using these concepts and it starts to resonate in your mind. Wow, that was a previous level of quote unquote resistance. Now we're using it as support. And there's your flip, your little inverse, right? So, going into this week, I think it was fair to say that our weekly draw was at 15,856, which was realistically our next swing high up, right? So let's just say price closes the week. There's no trading tomorrow or Friday. This is where we end, right? We sweep that high and we close below it, right? What do we have formed just below this weekly candle? Well, we would have a bullish imbalance, right? So, ready? We have big green candle up, right? So look at that wick. Next candle is a green wick higher. And then the next candle to the right is a low wick, right? Now, you would see that in between that middle green candle, the second of the three green candles in a row, there is space on each side of that candle. So within that range, we're going to have a bullish imbalance, right? So um, the anticipation at that point would be, okay, market structure is bullish, right? We took out a swing high in the process. I would have my fibs. I'm using the fibs that I have on here right now is more of a higher time frame because I really am truly targeting that 16,257 on a longer time frame or longer time horizon. But again, even on the weekly, where do we retrace to after making that high? 50%. Look what it does at 50%. Come on. Come on. We wick right below 50%. We take off. It's crazy. Oh, wait, that's a black box. Bullish breaker.
got into a bullish breaker at 50% of the range, and we've taken off since. We are up about 1,700. No. Yeah. 1,700 points in about 2 weeks. It's crazy, huh? But anyway, yeah, I mean, look, so we take out the candles high at that 15,856. If I'm uber bullish, I want to see us close up above that level, 15,856, and ultimately hit our destination at 16,257. To me, after sweeping that high, that would make the most sense for a bullish retracement prior to the next leg higher, if God willing, unless some crazy stuff happens somewhere across the world. But let's see. Oh, cool. All right. I appreciate your insights. Thanks. No, thanks for sticking around here, man. Yeah, sorry. Look, anytime somebody posts something that I don't use, I try and avoid commenting on it much because I don't really want to talk much about it. But turtle or somebody just made a turtle soup comment. Jim Burke says seeing these fib levels working helps a lot. I'll set up my charts. When you're in the gap, you can go either way, right or wrong. It depends. If you gap up, I feel pretty good about a bullish move higher. If I gap down, I feel pretty good about a continuation to the downside. When would I change my mind in that situation? Is a higher time frame level swept? That's it. That's your deciding factor. But yeah, no, again, I don't trade using the fibs. I just want to be clear about that. It's a way to map the range for me, and I want it in discount, specifically a bullish imbalance in discount. So, but yeah, Cajun, that's it. I'm just looking for some sort of bearish imbalance to the downside to show me that we're actually going to start to retrace. There's no market algo. Yeah, damn near to the tick. Yeah, for real. Yeah, KD, I think you should be up here to talk. Can you talk right now or not?
Yeah, I'm good. What's up?
Yeah, no, what's going on, man? What are you up to?
I'm just mapping out the Rivian trade that I took earlier today.
You're still you're selling premiums, huh?
Yeah, sold premiums. Not to go too long into this, but after getting railroaded on my midterm, I opened up my portfolio and I was like, hey, look, at least something's going good for me. So I cashed out my my sold premiums. If you pull up Rivian on the 30-minute, pretty sure we made a bullish breaker from, let's see, this is, it's popping up. Wednesday. Yeah, so Wednesday at the open. Yeah, okay, yeah. So last Wednesday, we made a swing low. We took a high and then made a lower low, which was we actually set up and
Rip,
gapped
correct?
above.
Start.
Yeah.
Yep. Okay, I see it. Yep.
Yep.
Okay.
Yeah, so yesterday we spent the whole time kind of playing around at that bullish breaker, and
Yep.
actually today we gapped below, retested into the bullish imbalance, and then actually ripped higher, which was nice. I was able to get in. I really was looking at the daily chart. We took yesterday's swing low,
Mm.
and then we're tracing down into that bullish imbalance. That's where I bought right before my exam. And then
Mm.
went into my exam and I pulled my phone out and we're at 1760. So I took some of the premiums off there from the morning low to the near the high of the range.
Yeah. Yeah. No, I'm seeing it. This is I don't want to say exactly the same, but it's very similar to what I see on Nasdaq right now,
Mm-hmm.
where the sort of balance to the upside, and the next candle. Not only do we take out the previous day low, but we also get into that imbalance before making that move higher, which we did here on Rivian. So
Yeah.
to me, Rivian,
Yeah, I mean,
you know,
honestly,
hold,
I'm waiting
here's,
for Rivian to take liquidity at 1822. So my bias on Rivian has been that it's bullish bias, especially with Tesla, moving as it's been. I was thinking that the other car manufacturers would also get some type of boost.
Maybe, yeah. I mean, look, I'm looking at it from this perspective. We made our first low on Rivian at Monday, the 30th of October,
Yep.
right?
Yep.
In the bullish imbalance dating back to June 29th.
Yep.
Right?
Yep.
Look at the for 50% of that imbalance. Beautifully done. You get your little bounce there. We actually do pop back into this bearish imbalance that was from Wednesday the 18th. Every move justified again. That's the whole idea and the concept behind everything that I'm doing here. We move below. What do? We swept the low of Monday the 30th, turtle soup, and so far we are up about $2.50 from that point. But yeah, I mean, look, you get over 1877, you have your bullish breaker set up, and from that point, you do have a pretty big imbalance up here, up to 2173. But
Yeah.
the next imbalance higher, you not completely, but you almost filled it up, and that goes up to 2518. Not anticipating this move, by the way, but I'm just showing where I'm seeing some sort of quote unquote resistance levels. But yeah, that's back up to that little swing high that you made on the
Mm-hmm.
back in July.
Yeah, yeah. No, I mean, dude, it was a nice gap up that we saw on Tuesday, the November 14th, and then yesterday we just retested into that swing low, and that gap up held it. Yeah, the other one too, like that Ryan and I kind of like, with Target, that was pretty fun today too. Looking at C Target.
Yeah, I know you guys have been on Target for a while.
Yeah, well, Ryan texted me he bought Target at like a price I won't disclose, but I was like, yikes, dude, because I was like, yo, you're either about to see 105 or you're about to see like $98. And he was like, seriously? And I was like, yeah, probably. And and so like when Ryan starts to fud himself, that's when I'm like, yo, that's when I become the most bullish. I'm joking, by the way, Ryan, if you're
Yeah, Target went bananas. I didn't even see this.
listening.
Gee,
Yeah. Target went stupid dummy banana land, which is funny because I haven't touched Target since that Wall Street Journal came out I think a few months ago, where I bought it like 125 I think a share, and then I sold it when I hit 138 actually. So it's back in June, the June high, the June 15th high, is when I
right.
when I was trading that little dip and ripped back up. Wall Street Journal came out and said, Target stock LGBTQ, is this going to be the death of Target? And it's actually kind of funny because if you look to see it June 12th, June 9th, June 12th, that's when we swept the lower liquidity. People, sentiment was down on the stock. And I was like, wow, these people are really going to beat the stock up over this. So I just bought it then. And then I've been scaling back in ever since we dipped below 115. Because honestly, it was just DCAing back into it. So,
You want to, right?
yeah.
Yo, so check this. Are you looking at the daily chart on Target? And for anybody else listening,
Yeah, I
check
am.
that.
I am.
Okay, so ready. You have your first low was made on August 24th, right? Was it exactly August 24th? Sorry for yeah. Oh, August 25th. Sorry. August 25th. I'm trying to squint my eyes to see this sucker. Now, see our little high that we made right up here at Tuesday, September 5th. Right? That was that little high. And now you get your second low, which is October 6th. Right? Ready for this? We break and we gap up, obviously, right? Pretty electric move. Now, where do we dip into for the low of today's candle? Haha, bullish breaker. We moved higher from that point. So you have your low from August, your high from early September, the first week of September, your second low, which is mid-October, your gap up from today. The low of today's candle was that bullish breaker, sorry. And you have a bullish market structure shift, and you have a pretty big bullish imbalance down here in discount. So it's a pretty good eye, man. That's a nice move. Very similar to Disney. Disney has been one that I've been enjoying playing, and I will post that in here right now, because this is one that
Yeah, I
has,
mean, Disney's a stock that I overfutted that one really bad. So I have
like
to eat my words on that one because like
every,
I was joking that thing's going to zero. It's obviously not going to zero, but I was not expecting this type of move.
yeah. Now, I mean, um, I kind of did, but here I'll show you. I'm gonna screenshot it and send it right now, and I got tweets posted to it for timestamps as well. Um, Here we go. I'm gonna post it right underneath this weekly right here. Um, hmm, right here. All right, so I'm gonna post Disney up top so you guys can see. Ready? It's coming here shortly. All right, it's up. Okay, check it out.
Disney's really just been sucking like lower liquidity. Holy crap!
Yeah. So here I'll walk. Obviously, again, hindsight. How easy is this thing in hindsight, man? It's the easiest thing in the world, but that's why I tweet it. So can't fault me for that. But all right, so we swept the COVID low. After sweeping the COVID low, I tweeted Disney sweeps COVID lows, bouncy time. And we bounced, right? And why is that bounce noteworthy? That first initial bounce. Yeah, we came back down after it, but why is that first bounce actually noteworthy and something that we would pay attention to? Well, if you look and you zoom in closely, that bounce actually took out the previous little high right there to shift market structure bullish, right? When we take out a swing high, I'm considering that a bullish market structure shift. On the flip side of that, when we take out a swing low, or the trend, I guess you could say, if you want to say market structure shift, but, and when we take out a low, I would say to myself, okay, we have a bearish market structure or a bearish trend, right? So price takes out that little swing high right there. Price retraces back down where? Into, you see that big black box I have right there, our bullish breaker. And you'll see that little low, high, lower low, which is that COVID low break. And we get down into there. And what do we do from there? We take off. Today we took out, oh, no, we didn't. Oh, no, I think we did actually. Hold on. Let me get the exact number. So the high of today was 94.57. That previous high was 94.52. Yep. So we did actually sweep that high by 5 cents, but that's enough. So again, my range is just mapped in that way where I have low to the high. Do I necessarily know this is the high? No, not necessarily. So what am I going to do before I just try and cherry pick or jump the gun and try and short something? I'm going to wait for a bullish, bearish imbalance to occur. And from that point, we'll see what happens. We got a lot of support levels down below, so I would still consider this a bullish trend or a bullish little market structure shift in the process. But yeah, that was a sweet trade, man. That's from $78 to $92. My favorite one is AMD. I'm gonna send that one to you guys. Actually, Palantir should be my favorite, but I'm gonna send AMD. AMD.
Fun fact: Palantir is in the top of the S&P, or not S&P, top of the market for highest annual return. It's at a 315%, I believe.
Yeah. Now my position on Palantir is up a stupid amount. If you want to see, type in money sign PLTR and then app, and I posted it I think 2 weeks ago. What my the percent gain was. Pretty cool,
Yeah.
and a lot of longer term plays. I'm not trading options on these. I just buy shares and do it that way. But okay, so now I'm gonna post in right under here. I'll do the AMD chart. If anybody's got any charts that you're looking at for tomorrow and you want me to chart them up or look at them, just feel free, drop it. I got probably like another 15 minutes on here, and then I'm calling it quits. AMD. Surface, you texted me. I texted you back. I didn't hear from you. Um, Here's that. Um, let's see. Okay, cool. Let me just share this AMD chart. It's going to be on the top bar again. Okay. All right. Shared it up top, but check this AMD chart. This is just purely beautiful.
you have your low dating back to, I don't know, some point in May, in between April and June. Let's put it that way. You have your low 80.97. You have your high at 132. There's your bullish retracement back down into discount, specifically 79%. Look left, you have a bullish imbalance there. That's where I took my entry. And yeah, the rest is pretty much history there. So I'm pretty much all the way out. Do have some shares left that I'm just holding for the completion of the Mando model, which would be at 132.96. Could it be a pipe dream? Maybe. Will I be right? Maybe. But that's why I like to scale out, and I like to scale out in the opposite way, where most of my positions coming off early. That way, I let the runners go, and if the runners get to the ultimate destination, cherry on top. But if they don't, it is what it is. If you go back to my tweet, and I'm gonna actually, yeah, I can just go back in here and post it. Actually, here, I'm just gonna do it real quick. Where is it? Here's AMD at Mando Trading. Hold on, I'm pulling it up. Search. Okay. You can go back all the way till 9/23 to see when I first posted about this AMD chart. But here, where is it? Okay, yeah. So on Sunday, I tweeted one to go, meaning one target to go. 122.12 is my first draw. I'm sharing that to the top bar right now. Boom. And now, if you go back to the tweet that I posted first up in this top bar, where did we hit and reject from? Huh. What was that first draw? 122.12? Huh. 122.12. 2 days before. Crazy. Liquidity is a crazy thing, man. The best concept you can learn. If you don't want to learn from me, that's fine. But if you want to learn about this, you could check out his YouTube channel. He's a little boring, but I'll never speak poorly about it. I gotta be honest. Just different stuff. But what else? What else we got here? What can we cover within 12 more minutes of going on? I just got a message. I like listening to you get fired up about this shit. Yeah, I'm
Me
glad.
too. Me too.
I get pissed. I've just been so on tilt over the last couple of days. I got to be honest. Really getting fed up, especially with this damn app. But what else? What else can we look at? Anybody post any of these charts? Here we go. Let's see. Coinbase. All right, cool. We can look at Coinbase. Yeah, I saw that. Netflix too, for sure. Was shocked by the target price action. And of course, as always, you'll have those who say they saw this coming. I mean, Katie kind of did.
Nah, I don't know if I saw it blow off the top like this.
Yeah.
Yeah, I mean, I'm not playing the I told you so game. I'm
I
kind
think,
of
I think
done with that game.
that's just a faulty argument, though. I got to be honest. When you say, "Oh, people say they saw this coming," well, look,
Yeah,
everything that I've kind of gone over tonight is, it's been an after the fact thing, but that's why I tweeted. Uh,
yeah,
so it's there. You could say whatever you want about it, but it's there.
yeah.
Yeah,
Let's put it this way. I thought it would happen. I just didn't think it would be that explosive. I mean, like you're talking about like a mega cap name that's plus 17% in a day after reporting sequential quarters that were bad. And of course, like, news is news, but like, yeah, I mean, I didn't expect it to be received like that. That's for sure.
yeah. We'll look at those two names, and then I'm probably gonna call it quits.
Wow, dude, Netflix is 461.
Yeah, buddy. Look at my tweet from Netflix over the weekend. Do sign Netflix and then at my and you'll see.
Dude, this daily is disgusting.
Yeah, I don't. I usually look at the weekly for those like I don't want to say illiquid. Like there's definitely liquidity, but they're gross the way that they move because they're highly priced and disgusting. But yeah, so Coinbase. Let me just show you this right here. Again, here is I'm gonna screenshot Coinbase and I'll throw it in, and then I'm gonna show the weekly on Netflix. Again, like I posted this Coinbase chart over the weekend, so if you wanted to see it, just do the coin and then me in the search bar, you'll see it. Same thing as Netflix. You go to money sign NFLX and then at my name, and you'll see my tweet about it. But for Netflix specifically, I tweeted about it on Sunday. Weekly draw at 285 flat. That sounds pretty good to me. Still kind of far from it. But hold on. Here is, I'm coming back over. I'm going to post these real quick. Here's coin. Netflix. All right, Netflix is going up first. I mean, this one I don't really have all that much to say. I mean, it's more like see it. Once you see it, you can't unsee it. And then I'll post Coinbase here. Coinbase, a little more, I guess you could say, analysis. If that's the word you want to use. All right, I posted them both. I'm going to pull them up real quick here. So let's do Netflix first and then Coinbase following. What the hell? I just pinned it. It should be up there. Oh, yeah, it is. Okay. There's Netflix on the weekly. Again, if you want to go back and look so it doesn't sound like I'm talking in hindsight, there's your range setter. You might say, oh, why did you use that 0 point at, what is that, 315.62 instead of that low at 285.33? Well, what was the price run that took out that swing high to shift market structure bullish? It was this one, the one that I'm using. So price retraces back down into the 79% at 351.19. Bodies, beautiful respect. And there's your run. We cleaned up on that bearish imbalance right there at, I think it was up to like 440. So we cleaned up on that imbalance, and we got 485 as the swing high, or that's where the model would complete at. And now let me just post Coinbase real quick here. Should be up. I don't know what's going on here. Okay. There it is. Oh, okay, cool. I did it twice by accident. Okay, there's Coinbase. You have your swing low at 46 or 47.65, and that was after, you see that 47.65? Scroll left on your chart. That is a higher time frame low that we swept. So you have your low up to your high at 114.43. You have your retracement back down into discount, specifically the 62%. Now we do have two imbalances below at the 70% and the 79%. Now, from this point, I got to be honest. Do I feel like Coinbase can go to that 114.43? I do. That would complete the model. But if you zoom in real close and you look at this thing, you'll notice that we actually have relative equal lows. So again, kind of going back to what I spoke about earlier is when you get like perfect lows like that, it's kind of suspect that at some point or another price might want to come back down there and clean that up. It's like double the amount of liquidity at that point, because that second low that we had didn't sweep the liquidity or take out those stop losses in the process. So when that happens, I'm usually kind of looking for price to get back down there. But that doesn't necessarily mean we don't go to 114 first. I don't know. That's just my take on it. What else do we got here? What else? Let's see.
Mando, does that qualify for your golden pocket short? I mean, I just did the high to low of that range. And it's sitting in the 0.62, 0.79 range. Because I'm looking at it too, and I'm like trying to figure out
What do you
if
think?
what's up.
What do you think?
I think it is a short. I would be thinking.
Oh, damn. All right, good. We disagree. That's fine. Yeah, no,
Yeah.
I mean, look, again, can I justify it? Yes. Is that helpful? No, not really. But guess what? There's 500 million stocks that you could trade. Not really, but uh, I personally, I think 114 is a draw. I'm still pretty bullish on Bitcoin here. I think Bitcoin can get up to 42,000 over the next couple of weeks. I'm actually going to post that weekly chart because I want to know what you think about that. I know you're not a huge Bitcoin fan, but just the
Uh, I
chart in
was
it.
talking. I was talking about with Ryan, and let's put it this way: I have a short on Bitcoin, and if it hits 42, I am going to get nervous.
Oh, shit,
Because
damn.
42 is like the line in the sand.
Yeah,
That
it's kind of
yeah, I mean above 42, we're talking, a race to upper 40s. Um, so yeah.
here. Check this. I'm posting it right now, and I'll put it up in the thing. Where I'm gonna go through the comments one more time too, just before I bounce off here. But dang, thanks for sticking along. I know there's a lot of people that have been here for the whole time. So, okay, check this. So I just shared the Bitcoin up at the top. Okay, so I'll just give my point of view really quickly. Okay, so we are currently in a bearish trend. Why would I say we're a bearish trend? We have taken out that low dating back to June, right? There. So that low of June was right of June of 2021. Shit, that's a long time, right? So we go over there. We took out that low. To me, at that point, we are the market structure is bearish, so bearish trend, right? And I think that's fair to say. I think a lot of people would agree with that, although the more recent runs have been bullish, right? So at this point, although this is bearish, to me, it's still bearish. I just don't see a world where we reject this bearish imbalance and not the bearish imbalance at 50% at 42,000. I just know, again, from watching this over and over again, from, practicing and using this essentially as my model that I take all my trades off of, price likes to get back into discount. So for shorts to be able to get an opportunity to re-up on their short about $5,000 cheaper into that discount range, that seems pretty realistic to me. So if you do get that Bitcoin run up to that 42,000, I think that's more than enough for Coinbase to satisfy that 114. And yeah, so what are you thinking on Bitcoin there?
Yeah, I don't really have that much I'm going to add there. Yeah, no, I mean, dude, that again, yeah, I mean, if we get out of the discount range, that's when, if you are short Bitcoin, you probably want to get out of the way of a moving train. That's basically all I was gonna say is like, um, I mean, I mean, I have long ETH right now and short Bitcoin as a pair trade. So not
Huh.
yeah.
Yeah, ETH has been a little bit more laggy than Bitcoin has for sure.
Oh, absolutely. Yeah. Yeah. I mean, ETH has really been trading, like the chart on ETH, just the moves it's making just make me shake my head because it looks just completely liquid. Like, I mean, it's trading like a penny stock at a $1 million market cap.
Big time. Yeah. The volatility in crypto has been pretty cool. I saw Danny Trendlines wants to check that QQQ. Danny, what time frame are you looking at? Because earlier on in the call, when we pop off, I'm sure you just pop. Listen, I pretty much gave a rundown what I'm thinking on tech. Moving on here. But yeah, if anybody else has any questions, I'll stick around and answer some of them. But yeah, what's up, Teddy?
Yo, on Bitcoin, bro, I'm definitely bullish. For sure, since we left those relative equal highs at 31 and a half, and we saw speed through that, that speed tells me that whoever was short or the amount of shorts that were there at 31 and a half, the only reason why we saw speed like that is because of covering, right? That's the only if we just swept the high and there wasn't speed, right, that tells me that they're at least going to add more, right, add more shorts. But we definitely saw speed pushing away from the 31.5. I mean, we flew, right? So that tells me that those shorts covered. The only reason why they would cover, in my opinion, is because they don't think it's coming back. They're covering because they think it's gone. It's definitely going higher. So I'm with you. I for sure think at maybe 42, right? Maybe 40 at least. But yeah, whenever you see speed like that, especially at those relative equal highs, yeah, that's a goner in my opinion. Now, like I said, if we just swept and wasn't that quick, that would be a different story. But I'm for sure with you on that.
Yeah, no, I mean, that kind of goes back to the point that we spoke on earlier, where it's like, okay, you have whatever the high might be at a specific point. You sweep that high, one of two things are going to happen. No, of course, Mando, you idiot. Of course, it's either going to go up or down, right? Okay, so what is that confirmation that we're going to continue higher versus go lower? To me, it's some sort of imbalance. If you look on the weekly, we have a bullish imbalance through that level of liquidity. Also, if you look in terms of like the futures or even a common share ideology, like when you're going short on something, your stop loss is going to be in the form of a buy stop, right? So when those short stop losses are triggered, they're actually buys, so that can really expedite the process, and that's when you get that like type of breakout trade, that again, in like 2020, 2021, it was so easy, and they were happening all over the place. People would literally have breakout trader in their bio. You don't see that much anymore because that's not typically what happens. But in this situation, to me, it made a lot of sense, being that we are still, for shorts, we're in premium. So if you're buying a short here, to me, you're overpaying for your short, until you get into discount of the range, which is at that 42. So I mean, look, could I be wrong? Yeah, I've been wrong before, but to me, I'm thinking that the range low here is set, and I'm thinking that we get up into discount prior to any sort of reversal. Doesn't necessarily mean we're going to get to 42.40 and dump. No, maybe not. Maybe I'm wrong at that point, but at that point, I will definitely remove any bit of bullishness that I have on Bitcoin. And realistically, I really won't be bullish on Bitcoin again for a while. Not on the actual asset and use cases itself, but just based on me looking at the chart here. I don't really see it, but I don't know. Could be wrong. I've been wrong before. I'll be wrong again. That's again a part of it, and you got to get good owning that, because if you don't, you're just gonna complain. You're gonna look to blame it on everybody else, and instead of just looking in the mirror, taking ownership for your loss, and from there, head and shoulders on the hourly. Oh man, I wish you didn't say that. Don't get me going. I'm about to get off here. No, I sorry, man. I don't really abide by that terminology either. I think it's really what's the word?
Abysmal way to look at a chart.
I mean, it's just subjective too. I mean, you can kind of just like what do we used to say about the trend lines? Like, oh, you could just use it to fit your narrative. Like,
Yeah, you just, oh my god, I broke my trend line. Oh, let me just move it down.
yeah, let me just move it down a little bit, make sure that it holds there on this one, and that was a major issue. Oh, well, maybe I see it like this. One thing that we should note on tech right here is that we have no, not yet. We didn't sweep that 15,821 low. Haven't done so yet. And if we look at the overarching range, you can crunch this even smaller if you want to, but for the just really, I'm looking at it from a larger time window or time perspective here. If we did in fact create our high at this point, 50% of this range from this most recent swing run up that we had on, I really should move it up, but I'm not gonna for right now. 15,207 up to the high at 16,049. Our 50% of that is 15,628. So what is that? Almost 200 points, a little over 200 points actually. That would bring us down to 50%, in which we do have a bullish imbalance that we created on the CPI candle. from yesterday. I'm still not totally sold. I got to be honest. I'm not totally sold that this range is set just yet. So I'm going to need some sort of imbalance to show me otherwise. I still think that draw is going to be, what's that number? It's like 16,000. Hold on, I'm pulling it up right now.
Yeah, I really like the way that you decide that that's your factor, is that you use an imbalance to determine if if we did get a sweep or if it is a breakout.
Yeah.
What I am seeing right now, I'm seeing possible BPR back to the downside. So we could make an imbalance back down and leaving behind those relative equal highs on NASDAQ, especially on where, around 16,000. I think specifically it's like 16,060 or something like that, or 50.
Oh,
Let's see.
today.
49, 16,049. Yeah. I think we could leave behind those relative equal highs and then create a BPR back down.
Right.
That seems possible to me.
I'd agree. This is the thing about setting the range here and why I'm not totally sold on it. So, did we take higher time frame liquidity? Yes, we did. On the flip side of that, I'm going to give it at least tomorrow's candle to show me. If we close down, and let's say the candle closes just the way it is right now, and we have that bearish imbalance down, from that point, I'd probably consider a retracement down into discount of the range. But if we don't do that, I'm still, that's 16,257. And the reason I say that is because I guess this is kind of a hopeful optimist, I guess you could say. But I would look at that point. I kind of just want this bullish breaker that we haven't gotten back down to test, and that bullish breaker is from on the daily, 15,468 down to 15,216. So about 250 points in that bullish breaker. That was one daily candle that dates back to October 12th. I would prefer that to be in discount and when we do eventually and realistically get our retracement, because they do happen. When we do get that retracement, just for that hopeful optimist, I guess, for society, I would hope that level would hold for bulls, and I'd feel much more confident about it if it was in discount and not right now. I wouldn't want to see it get melted down now. That would be pretty ugly. So, let's see. We got any more comments in here? Anything like that? Anybody else want to come up and speak? Let's see. I'm scrolling through. Do you wear the Mando helmet while you're trading ever? You should only when you short. Yeah, I wear it all the time, man. You can't tell by the voice. Always. Yeah, no. Actually, somebody was chirping my helmet. My helmet's great. I don't know why anybody's talking shit about my helmet. I think it was like $350. It's carbon fiber. It's not even like shitty plastic or PVC. It's legit. Hold on, I'm gonna get it. One sec. All right, here it is. Let's knock on this sucker. Ready? Listen. That's legit. No, no blood.
Yeah, that was messed up. The person that was chirping at you, bro.
Just funny enough, background story. When I first made this Twitter account, my name was not Mando at the time. I used Danny Phantom, that old Nickelodeon character. And then I saw some other guy. He's no longer on Twitter, but this guy had the freaking Danny Phantom thing. So I was like, I can't have the same one as him. And I just had finished up watching. I think it was season 1 of The Mandalorian. And I was like, yep, I like this. And it's it's a pretty sweet look, sweet helmet. But I have kind of went away from it. I don't think it'll ever be an issue with Disney coming at me, but just in case, that's why I went more towards the moon logo. But the helmet, it's staying. The first one I bought was like a piece of crap on Etsy. I thought it was going to be nicer, and it came and it was all bent from China, like some broken box. It was all like deformed. I actually still have it, and it was silver, and I wanted one that was a little more unique. So I figured let's get the green slash on the eye, and got that green slash on the eye. This one's got like padding inside and stuff, and it's much better put together than that other piece of crap. But yeah, I mean, I really think that's all, unless anybody else has any other questions. If it's about anything in reference to any of the concepts that I use, you can totally just check out on YouTube. And if you want them directly from the source, I think on a lot of the YouTube videos that I have, I just link them in the bio where I'm deriving the concepts from, because again, none of these are mine. I did not create any of this stuff. My model itself, it's unique to me, but it's derived from multiple concepts that he himself uses. So his whole ideology behind it was, look, there's a ton of different setups that can occur. You don't have to use all of them. You just get one, and you feel like you master one, you can feel good about it and use that. I mean, there's another guy in the group named Ryan who he actually turned me on to this guy, but Ryan trades very differently from me, but all while using the same concepts. So for example, Ryan would be looking for sweeps of liquidity and almost immediately jumping in, whereas I'm a little more I maybe I'm soft, but I like to see confirmation prior to jumping in, because I want to be able to map out exactly where my stop loss is going to be. That makes sense. I want to be able to know where my target is going to be. That makes sense. I'm not just going into a trade, I think it's going to go up here, and not have an idea of where it could possibly go up to, where I would cut, because at that point I think the trade would be invalid. Like, those little things are all taken care of prior to me even pushing the button to enter a trade. Takes a lot of time. It does, trust me. Sometimes I find myself falling back into the trap where I'm like, I like it here. I know it's going up. I'm going to take it. And then I'm like, well, I just added on $200 extra of risk on a loss when it was completely avoidable. I didn't have to do that. I could have just waited. And if I didn't have the patience to wait and it took off without me, so be it. That's a really nice, kind of motto that I've taken. If it's not going to satisfy the criteria for my specific model, so be it. I miss it. Oh well. There's a million other opportunities throughout the week. I don't need to feel like I'm pressing the button just because, I guess you could say, because that really that's when I guess you could say bad things occur. And I think a lot of people have immediate regret when they push the button. I've been there before. You press the button and you're in your head, you're just like, this is not going to work out. And I'm trying to completely avoid that, because that is not disciplined trading whatsoever. But discipline is hard in any part of life. So the fact that it's hard in trading is no secret to anything.
Mando, I got one more chart actually I would like you to look
Yeah.
at. U.S. oil, crude, WTI.
Oh,
So,
yeah.
yeah. So,
TL. I have TL charted. That's why I'm going to look at that one instead. But
okay, yeah,
probably.
we'll probably be talking about the same thing. So I moved on to the monthly. I moved on to the monthly chart to make more sense of it. We rejected September 1st. We rejected the monthly fair value gap dating to August of last year, a bearish fair value gap.
Mm-hmm.
We have lows at April, and no, I apologize. May and June is our most recent lows. But we have a double, a relative equal low, December 1st of 21 and August 1st of 21. What are you looking at for oil move? We're kind of in the middle of this range between just rejecting the bearish fair value gap, but also having a relative equal low or relative low,
Yep.
and then a relative equal low below it.
So over the weekend, I posted about it, and I got to be honest with you. I posted in a question. I was like, do or die. This, is this the turning point for, CL? And I got to be honest, at this point, I'm actually, I'm not loving what I'm seeing over these first couple candles this week. I would have personally liked to see us actually move higher from this point.
The fact that we did not, it's a little concerning. We just took out higher time frame liquidity, and while we did bounce $5, I mean, it's really nothing. We
Yeah.
are in that bearish market structure. So on CL, I'm looking at it from Friday, November 3rd. If you draw your high from there and down to your low at Wednesday, November 8th, we bounced up, we hit 50%, look left, we have a bearish imbalance at that 50%, and so far we've rejected. So ultimately, really the target at this point would be 75.04. That was our low from the 8th. I think that's realistic at this point. And then at that point, we have an untouched bullish imbalance down in discount at the 70% at 73.29. And we got one more down at like 71.62. And we have relative equal lows there. 78. I think that's probably realistic. But yeah, I mean, this one would have made a lot of sense to me if we started to move higher from here. But the fact that we didn't, and I was wrong in a sense, I didn't trade it, but I am wrong in this situation. Yeah, I think we can kind of move a little bit lower here.
Yeah.
It's not really that great because I do hold shares of Chevron and Oxy. My Chevron's holding on by a thread. I'm like barely green on them, and Oxy I'm up actually 3 or 4%, but not much. Or energy is obviously everybody tells you, oh, you want a diversified portfolio, blah blah blah. Yep, okay. Well, energy's been getting smacked, since freaking I don't even know when was that high put in. Yeah, it was September, and while tech is continuing its move higher, your return on tech would have been much better. But hey, I mean, I like having a well-rounded type of long-term portfolio. It's something that I don't really anticipate touching probably for another 30 years, I guess. I think that's like the first time I don't even know. When can you start taking from the Roth?
Roth, you can. I'm pretty sure you can take out whenever you want.
Yeah, you get taxed. You
Yeah,
get,
yeah,
okay.
yeah. So I think Roth is 57.5
Oh, okay.
is
So
when you. Yeah.
20, I can make it.
hmm And I think the traditional IRA is 59.5. Yeah, the other thing is too though. So with the Roth, you don't have to make minimum withdrawals every year. With the traditional IRA, you are required to make minimum withdrawals.
Really? Huh, I didn't know that.
Yeah, so the Roth gives you a little bit more flexibility on how much you want to withdraw and when you want to withdraw.
Yeah, I'm again. It's just something that I don't anticipate touching at all. And to me, it's like something so easy where you just, you know, uh, I guess maybe not easy for everybody. Maybe that's ignorant, but like you
Yeah,
look at like $150 a week. That's gonna max your Roth for the year.
yeah,
I think they just this year it's like $6,500, and I think next year is like 7 grand. Um,
I think so.
but yeah, I mean, look, to me, $150, I can afford to put $150 away each week and come back, way later on and use the money for whatever, really. But yeah,
Yeah, no, I'm gonna be honest. The way that this oil chart's speaking to me, I'm like, yo, it looks like as if the market's saying that oil doesn't exist anymore. Like
yeah, I
that's
mean,
how that's
uh,
how I'm reading this price action. It's like, oh yeah, sorry guys, we don't need oil. We're going to solar and everything else next week.
yeah, I mean, I'm looking at this candle obviously just opened a couple hours ago on crude, but
Yeah,
we might create another bearish imbalance down, and from that point, that's just going to set up another bearish trend. Could you get another bounce? Sure, but yeah, bearish market structure. Again, I was wrong here. I saw the higher time frame sweep down in discount, and I thought this would be the time. Do I think crude is going to sweep 64.65? No, I don't. I still think ultimately the long term projection for this thing is going to be up.
how long that's going to take, that's a great question, something that I don't know the answer for. But
Yeah,
I
I marked my lows at 66.78 because that would be June's lows, May's lows, June again, another June. There's 3 sweeps, or 3 lows in June on the daily.
Right.
So I just marked it at 66.
Yeah, I'm not so sure.
Yeah.
Well, I mean, whatever. I'm wrong. It is what it is. Unless, look, tomorrow it could save itself if it makes a strong move. What is this about? $1.70. You prevent that bearish imbalance from forming, and you reclaim what was previously resistance as support. But I don't know. I don't know. But hold on. I'm just typing a message real quick. Yeah. So I think that's gonna. Oh, we have a request. Teddy's coming. All right. This will be the final. Whatever. We'll put the ribbon on it. But yo, what's up, Teddy?
No, honestly, I do like crude. I think it is in a kind of accumulation phase, like moving down and sweeping and absorbing that liquidity to possibly get a move higher in the future. I agree with you. I do not think we're going to break those relative equal lows there, right below 67. I think that's going to be a good place where if we do reach there, that's a great risk reward, 100%. But to be honest, I would like that sweep of 75 and see some kind of rejection there, and I think that could be key for crude. To be honest, I definitely think that this is accumulation right now. I don't really see any indication right now that bulls are getting scared out of their positions, or or going short. It doesn't seem like that to me. It just seems like pullback. So I really like those lows there for sure, 100%.
Yeah, I think it's just like a higher time frame outlook for this one. And again, I would have personally liked that sweep to be the one that turned things around for it, but it still has imbalances down below that it could reprice to and offer bounces later. But yeah, no, I mean, I really don't think it's going to go below 64, 65. But
Yeah, even possibly that 74 low. That one could even be fairly significant. I think into that imbalance there. I think that's fair enough. I like that. I definitely don't think a retest of those relative equal lows right now is in the picture. I think if we do retest it, that's fishy to me.
what level is it you're talking
about? For the sweep, the one that looks good.
Yeah. Oh, what relative equal lows are you pointing out? The 7.
Right now, it's on the daily. I'm looking at U.S. oil, $67.
Here, let me pull it up. USO, like the actual. Oh no, USO WTI.
Yeah, it's a future.
Yeah, a little different than So you're looking at this one right here at 73.90. Right?
Yeah. Yep, that low right there. I like that sweep. I think a lot.
Yeah. So if you were to draw your the fib from, let's see, right here at our low that took out the first high of Wednesday, June 28th. There's your retracement. That lines you up pretty well with 79%, 72.95. But yeah, that's itself right there. You do have a bullish imbalance that was filled with that relative equal low that was formed right there. Yep, right there. Boom.
Mando, I just texted you. Oh, bro, look at that. So I marked
you have you.
Yeah, I marked discount in green on the fibs.
Yep.
Premium is in red, and then I put just the the 0.62, 0.79 in gold. Yo, that's kind of crazy. Like that that's 74.90 off the low from November 7th. That's like the 50% of that mark.
Yeah, it's pretty crazy.
Interesting.
Yeah, no, it lines up pretty well. But
maybe we do get that sweep at like $74 and kind of us along.
I think that might be the move there. But all right, I'm gonna pop here. But everybody, thanks for listening. If you're for sticking around and all of that, just check out Katie, Teddy. They came up and spoke. I appreciate them doing that. I didn't get to my real rant that I wanted to give, but we'll do that another time. But all right, well, good luck tomorrow to everybody. I will catch you all later.
Just peace out.